oil prices are rebounding, and that's creating opportunities and challenges for the energy sector. Investors join us now as we forecast. John Kilduff, founding partner of Again Capital and a CNBC contributor. John, the move in crude has been pretty unbelievable, and we're seeing, down, obviously. That was unbelievable when it went negative. But the rebound, I'm actually speaking about, when we're seeing another 10% added on today. The stock market's up on some type of nebulous hope that we can't really see the future, so something good might happen a while from now. Is oil rebounding based on hope for reopening things, or on actual dynamics that you can see in demand right now that are picking up, or supply that's picking up right now? Or is it also based on sentiment and hope?
No, Joe, I think there's an element of sentiment and hope, maybe to a degree, but there has just been a fierce reaction by U.S. oil and exploration and production companies to really crater U.S. output. I mean, it's still very high, but it's working its way down very rapidly. The rig count, the U.S. rig count, has fallen by almost upwards of 2/3 in less than a year's time at this point. And we've seen U.S. production fall by over 1 million barrels a day in just several weeks' time. From that record high in March, we're down over 1 million barrels as of yesterday or this week's report, Joe. So it's real. The other thing, too, though, is that gasoline demand has gotten off the mat a little bit. We were, upwards of 50% off the usual demand for this time of year. In this latest report, we were just 35%. That's still quite a bit, but it shows you that there's pent-up demand. It shows you that people are willing to get in their cars as soon as they can and even take a drive to nowhere if they have to. And I think that's helping us out here a little bit. But it's really the reaction by the U.S. industry here that's getting this price at least somewhat stabilized.
So whenever we talk, it's all about demand, it's all about supply, it's never all about just one or the other. And you're seeing at this point some things. We heard that the supply, there's nothing we can do about, but we shut down in the United States, and that's clear that happened. So that has removed some of what we saw when we didn't have any place to put all the excess oil. But at the same time, the demand picture has gotten a little less grim, with hope for better. Okay.
Yeah, look, and commodities is always, it's demand, supply-demand equation balance. And sometimes one side of that equation dominates, like recently when the Saudis decided to throw down against everybody and flood the market with oil, prices crashed. But for all the hoopla that we went through watching OPEC Plus get together with Russia and demanding others cut as well, we're the only ones doing it. The U.S. industry is the only one reacting so far to any great degree to these market forces. So this is how it should work. But obviously, this OPEC cartel that we're always up against has different ideas. But it's for real. Okay. But again, we're not out of the woods yet. We're not out of the woods yet, Joe. I'll tell you that. And there still may be one more flirtation with negative pricing when this June contract goes off the board in a couple of weeks. But beyond that, we should be clear of those kind of worries.